All right, good afternoon, everyone. Today is Wednesday, the 18th day of December, 2024. Now, I don't know if I'm not gonna do a meeting next week, right? Because it's Christmas next week, so I'm not gonna do it next week, and I probably won't do one on the first either. So this could be the last meeting that we're gonna do for a little while, unless I do some one-off stuff. But I want to let you guys know if any of you wanna meet with me, individually or anything like that, send me an email at support@targetviewtrades.com or support at targetviewtrades.com. Send an email there if you have any questions you need to meet up because it's going to be a while now before we meet up again. Next week on Wednesday is Christmas, and the week after that is the first. So the markets are closed on both of those days, and I won't be working. Um, but the 8th of January will probably be the next meeting that we get on the regular schedule. All right. All right. So today's meeting. Well, first of all, before we get into it, I got to show you how to do all this stuff. If you haven't taken a free trial with us, go here to tvtrades.com tv-trades.com. You can go to targetviewtrades.com too, targetviewtrades.com, either one of those. Go there, click on the orange thing here, or in here, just click on take the free trial right up here at the top. It's a blue one here. Either one of those is going to bring you to the same place, or the same looking place. This one brings you down here. It's $25 a week after the 3-day trial, or $90 a month after the 3-day trial, or $97 a year. No 3-day trial with that one. If you commit into the year, then the 3-day trial is not going to change your mind. That's how to do it on TV Trades, and to do it on Target View Trades, just click on this, and it looks a little different, but it's the same information over here on the side. Okay, that's how you get the free trial. Now, to use our stuff, you need to get Trading View charts. All right, if you don't have Trading View charts, then you can go here on the Target View Trades page. Target View Trades TV. On the Target View Trades page, go to Getting Charts right here. Click on this link. It will bring you to this page. I would say if you don't trade multiple markets, just get the essential. It's $14.95 a month. You got to pay $7 a month for real-time data to trade futures. You don't have to pay for real-time data to trade equities or ETFs. But if you're going to trade futures, you got to pay $7 a month for the real-time data, unless you have a broker that you can hook up. But there may or may not be a charge. It may be cheaper to just get the real-time data. I know it is. It is for me cheaper to get the real-time data from TradingView. Now, that's how you get the charts. All right, again, you just go here to Target View Trades, click on Getting Charts. If you don't have TradingView charts, you need to get TradingView charts to use the charting package. Now, you don't need to have the charting package, right? It says it right here at the top. You don't need to have the charting package because we have this page right here. We have this page right here that that's annoying. We have this page right here that you can go to, that you can go see all the signals are generated on this page from the TV Trades tool. All right, they're all generated right there from the actual tool, and you can see them there if you want to. So you don't even have to have charts to take advantage of the signals. They also go out to a Telegram channel, to 2 different Telegram channels, as a matter of fact, and I'll show you what they look like. Hang on. Here is one of them. Here's a Telegram channel that's got 27 alerts today so far. They tell you the time frame, the range, the time frame, the current price, the target, and the stop associated with each one. All right, and this is the QQQ Tesla. There's some equities in here. Tesla, the QQQ, the IWM, the SPY, Meta, Netflix, a bunch of different things in here. There's like 10 different things in there, 10 to 12 that I follow in there. And in here are the futures, the future signals in here. All right, so you get all these as well with the range that it's generated from, the price, the target, and a stop on all those things. So you don't even need to have the charts. You get all that stuff generated without charts. Okay. Now, you made it, Wayne. Good. Okay, so that's all that stuff. Now that's all great, and that's good. And I actually have the Forex is in there as well now. Let me go to see here. Let's just do this. tvtrades.com/trade table. Okay. So in here, the password on this, that's the password right now. I'm going to change the password. I know I said that last week, but I don't get around to it. This password has another another value now. You're going to see in a few minutes. This password that I'm giving you here to get into the protected area on this page, for all you guys who are actually trading view guys, you'll be able to access another private part of the trigger indicator. All right, a private part of the trigger indicator itself, the trigger tool. You'll be able to access the private part with this password. Okay, so if you go to unlock on this, then, well, that password didn't work on this, but, well, hang on, that's what it should work. Anyways, when it does work, it's just not going to work on this browser. Let me do it on a different browser. Hang on. tvtrades.com. Trade table. Okay, and I'll do it on this browser. And it'll probably work on this browser. There it is. Okay, so in here I actually have Forex currency pairs in here too. I don't really have a whole bunch of them, but I have a few of them in here that give you, let's see, okay, I don't know what that says, but in here, the US, there's a few currency pairs in here, and what they give you is the entry, the current price, the target, the stop for the different currency pairs too. So if you're interested in trading Forex, you can check that out. The future signals are right here. Futures long, futures short, stock ETF, sell signals, and stock ETF buy signals. I don't know what happened with that one right there. I gotta go check that out. But you get all that stuff here too. Now all this stuff is the same stuff that's put out in the Telegram channel. It's just organized a little bit better here on this private page. Now the Telegram channel puts it out all the time by itself. It sticks it in order as it comes. It puts the new signal on the bottom all the time. This has to get sorted. So when the signal goes in, it automatically sorts itself every time it adds a new signal. But it doesn't refresh itself automatically, whereas a Telegram does. So there's a benefit to having one or both of these things. Okay. Now that was that stuff. I wanted to get all that stuff out of the way quickly because I want to show you the other stuff that I think is going to take a lot of time. Remember the password, right? The password that I entered to get into this page, or the password that you would normally enter to get into that if that page were working on that browser. It's the same page. You get that password emailed to you whenever I change it or whenever you sign up. Whenever I change it or whenever I sign up, it gets emailed to you. So you got to make sure that that support at Target View Trades is whitelisted in your email. Okay, so you actually get that email, and it's going to say something like, important security information or something like that at the title of the email. It'll be coming from Target View Trades, and it says that. Make sure you open that and read it, otherwise you won't have access to either of those two things. Well, you'll have access to the Telegram, I guess, but you won't have access to the private page, and you won't have access to what I'm about to show you right here. Okay. All right. So this is from today. This is right now, right? And I totally forgot we had FOMC. I remembered it once during the day, but then I totally forgot it was happening when it was happening today. That was when David, you and I were texting back and forth. Job, good to see you in there. Everybody who's in here right now, I just went over a whole bunch of stuff. This meeting is being recorded. When it's done, when the recording is done, you will be able to go here to targetviewtrades.com. It'll be in upcoming and past webinars. It'll be in here. It'll be right in here. All right. And it'll also be, you'll be emailed the link. Go to webinar automatically emails you a follow-up link. It's going to have a link to it in there as well. It'll be in our YouTube channel. The link that you're going to get is going to be a link to it in our YouTube channel, and the link right here is going to be a link to it in our YouTube channel. So you'll be able to go back and watch this again in the future, okay, if you want to. I know some of you guys, there's a bunch of people popping in right now. Again, to take the free trial, go to tvtrades.com, tv-trades.com, click on the orange thing. It'll bring you down, take the trial there. You can do it from Target View Trades as well to take the trial. It's a free 3-day trial. Now, I said all that to say this. This is a 31 range NQ chart. All right. Now I'm just using a 31 range here because that's what I use in the morning when I trade. You can make it whatever you want it to be. A 100 range, a 200 range, a 50 range, a 15 range, whatever you want it to be. All right. It all works the same. So we have our range trigger down here, right? And what I had said, the title of this was getting in a bar early. Okay. Now, typically, what we would do let me just hang on. Typically, what we would do, hang on. Um, okay, hang on. I'll have to get back to him later. Typically, what I would do is we would buy when price comes out of the overbought or comes out of the oversold, right? That's how the indicators typically work. When using an oscillator, you would buy when price comes out of the overbought or comes out of the oversold. And what I want to suggest to you is, I mean, you all know that, in my trading, I set a goal for the day, right? I try to get the goal for the day. The goal is to make $100 per contract per day. I choose $100 because it's something that I can do every day. It's something that's easy to do and something I can do every day. So I know every day I'm going to get up, I'm going to go to the markets, I'm going to make money, I'm going to get what I want. And then I can stop at that point, or I can keep going at that point. It's up to me and it's up to you. Um, but so $100 per contract is what I want to make, right? So if we look at the NQ, this is a 31 range bar. Now the NQ is $5 a tick. So every one of these bars is 155 bucks, right? From top to bottom is 155 bucks. So my $100 target, my $100 goal for the day can happen within a bar. And that is something that you really need to wrap your head around, all right? Because if you think about it, what I've always done, and what I still do, but what I've always done and I've always said is, you trade with the trend, and, the trend goes down like this, and it goes up, and then it goes down like this, and then it goes up, and then it goes down like this, and then it goes up, and it goes down like that, and then it goes up, and then it doesn't go down anymore, right here, right? And then it changes direction, and it gets up above that level, so you have a direction change right there, and so you start trading in that direction, right? Anyone that's ever followed me knows that I've been saying that for years and years, and that's still true. But with what we have right now, in the past, we used to have to wait, right? It'd go down, you identify the trend when it establishes it, then it pulls back, and then you wait for it to get going with the trend again. It's got to have that commitment right there, coming out of the overbought. That commitment right there, where it comes out of the overbought, and it makes that first move in the direction of the trend. Then after that first move is when you actually get into the trend, right? So at that point, what you anticipate out of every trade is that it's going to get from your entry point to the prior swing high or low. In this case, the prior swing low, and every one of these would be the prior swing low, right? That's what you anticipate out of every trade. And you do that until it doesn't have that anymore, right? Everybody with me so far on that? Your bars never show opening price on the bars on TradingView. Well, you have them set up wrong then, Shahab. I can set it up for you. I can show you how to set it up, or I can just send you this. Well, not this, but I can send you a layout that will have it all set up for you. Okay. Not this layout, but I'll send you a different layout that has it all set up for you. Okay, I can email that to you. But right here, you see, these are open, high, low, close bars. All right, open, high, low, close bars. You might just have high, low bars. I don't know that. I didn't even know that that was an option. They have. I don't know. I don't know what kind of bar you have if it's not showing all that stuff. But I can send you a layout, so you'll be able to get what you need. But anyway, in the past, price would pull back, and you'd identify the pivot right up here where it got into the overbought. You'd identify the pivot. You get ready to take the trade when it starts moving back in the right direction, right? After the first move into the right direction where it comes out of the overbought, you jump in the trade and you ride it out for the whole leg, or just till it gets down to the prior swing high or low, whichever it is. You ride it out for that distance. But what I want to show you now is going to get you in earlier. Here, instead of identifying the pivot here and waiting until it confirms by moving in the right direction, you just go with the oscillator. The oscillators down here are going to tell you, when it's at the pivot. So you can enter at the pivot instead of entering after it starts moving in the right direction. You enter at the pivot. Okay? So you enter up here. You enter up here. You enter up here. You enter up here. Not only that, but when it starts to pull back, you enter down here. You enter down here. You enter down here. You could even enter right down there. Enter here. Enter here. all these different places. So not only are we going to get it on the leg down, we're going to get it on the leg back up. And then again on the leg down, and then again on the leg back up, and again on the leg down, and leg back up. That's what I'm going to show you how to do right here. Okay. Now, the TV Trades range trigger is key to everything that we're talking about right here, but it's got to have just a little more than what you see right here. All right. As a matter of fact, I'm going to change it just a little bit here, and this is where that password thing comes in. All right. There's a new version of the TV Trades range trigger that came out last night. Now, or this morning at 7 a.m. actually. Now, first down here for this down here, I created a thing called cover, because the times that you're interested in a trade, really, is when the blue line is going into the overbought, going into the oversold. That's when you're interested in entering the market. All right, but not every time it does it. But when it does do it, that's when you're interested in entering the market. When it goes into the overbought, it goes into the oversold. Now, you don't want to do every single one, because not every single one is going to be right. You know, there are times where it's going to keep going, and the oscillators will be able to tell you that. Now, this is called the cover down here inside the trigger. I created that so you could simply see when it's popping into or out of the overbought and the oversold. You don't have all the noise in between. But the noise in between is kind of useful when you have more than one line in there, and it's telling you when it's gonna pop, when the next up close or down close is gonna be the one that pushes it into the overbought or oversold. So the noise is kind of useful. So do you see how I changed the opacity right here by moving this around? That's how it is by default, 100%. If you knock it down to 50%, you can see what the line is actually doing in there. So it kind of illustrates a little bit. I created that just to show you, just so you guys could see easier when it's really breaking out of the overbought and oversold. What it does in between, it gets close to it. So like, oops, I didn't mean to do that. Like, I don't know what it's doing right now, but if we go to the end right now, see right here, a down close on this bar might push it into the oversold. And that might very well be a place where you want to buy. All right. Because what we're doing here is when it gets into the oversold, when it goes into the oversold like this, you're buying the open of the next bar. You're buying the open of that bar right there. When it gets into the overbought like this, you're selling the open of that bar right there. Remember, these are 31 range bars. Every bar is 155 bucks. I'm looking to make 100. So you can get into one of these bars, either one of these trades right here that just happened. If I'd have got in right there, I'd have had my goal for the day by the time I got to the top of that bar. If I'd have got in right here, I'd have had my goal for the day by the time I got to the bottom of that bar. You see? I don't actually send the new version to you. You just have to, you'll see there'll be a little purple thing on, I think it might be on one of these. That little purple thing you see right there, that means it has an update available. If you click on that little purple thing, it says update to latest version. Okay? Or you can just refresh your charts. That'll probably do it too. But on all of your charts right now, if you had the TV Trades Range trigger on the bottom, you click that little purple thing right there, and it'll bring up this window. It says update to the latest version. Okay? The question was, am I going to send that to you? Alright, so you see what I'm talking about here, right? Getting a goal for the day within a single bar. So you don't have to sit there and trade all day long. You can, and you will probably want to, but you don't have to. Or you can make your goal for the day, instead of making $100 a contract, make it $500 a contract. And once you figure out how good and how simple this is, you will see that $500 is not unheard of. Right here, we got into the overbought. If you sold there, there's 100. If you bought there, there's 100. If you sold here, you would have stopped out. That would have been minus 100. But if you sold there, you would have gotten it back. If you bought here, you would have gotten another 100. So you're up 300 at that point. You're up 400 right there. And the next trade could be the 500. And that's since I started this meeting. It's actually in the last 10 minutes in this meeting. FOMC did come out today. Like I said, I totally forgot about that. But so the markets are jumping around quite a bit right now. But it doesn't matter. If we go back to what I looked at, what I created earlier today, when I was doing the lesson plan earlier, all the way back here. And I'm going to have to, because there are so many bars, I'm going to have to do this. Alt back. This is how you do it with trading. You press the Alt button. Okay. So in here this morning, oops, you hold down Alt and the arrow, and it'll do this. Okay, so in here this morning, I went over this. I just went through all of these things down here, right? All these things down here where you would have a trade that triggered, a valid trade that triggered. And that was what I was showing this morning. Now, what I'm going to show to you guys right now is a little bit better than that, right? What you guys have access to by having the latest TV trades range trigger. In here, you put in the password. There's the password right there, right? If you don't have that password in there, let me get rid of the password. If you don't have the password in there, you know, for the stuff that we're doing this morning, it's still, all that is still there. But in here, there are two new things. There's a thing called the div line and the div area. That's divergence line and divergence area. Okay. Those are not going to do anything. If you click on them and you don't have the password in there, they're not going to do anything. But it's password enabled, and you guys, all you guys that are active members, you all know the password because it was emailed to you. Just put in the password, and then we'll go over to here. Go over to here. And I'm going to get rid of the cover, and I'm going to get rid of the snipe. All right, so you don't have anything down there. And I'll put the div line on, and I'll put the div area on. There. So now, what you're looking for is when this comes out of the, goes into the overbought, goes into the oversold without the red. All right, when it goes into the overbought or into the oversold without the red, it's easier to see. It's easier to take. And you see what I mean, David? What I emailed to you or what I texted you earlier about the gradual change as it goes into the overbought and the oversold, as opposed to like the snipe. Not the snipe, but the yeah, I guess it was a snipe, wasn't it? The snipe, how it goes up really square most of the time into the overbought, into the oversold. It's a more gradual approach. And you get most of the same trades. I mean, the way it worked out today in that one span today, it worked out actually better by, I would say, 3 less stop outs out of, I think, 17 trades, something like that, 18 trades, 20 trades, something like that. But this is what I want to show you. So all you're looking for is for price to get up here in the overbought like that, get up here in the overbought like that, without the red. All right, so into the oversold. So in each one of these cases right here, right there, you're going to buy. Right here, you'd sell. Right there, yeah, maybe right there. You might buy right there. Over here, you'd sell. Over here, you'd sell. Over here, you'd buy. You'd buy right there. Over here, you'd sell. Excuse me. And these right here are going to stop you out. That one and that one and that one and that one. Probably. I don't know. But we'll have to look at it and see. But right there is where you would buy. Right. This is when the FOMC came out, I think, right? Or a little before the FOMC. Right there you would sell. Right there you would buy. And right there you would sell. One more. Like that. Okay. Now this is all based upon the divergence, the separation that you see in here, where the black line is going opposite the red area. All right, it's going opposite the red area. Now they can go together on the same side of the line, but the black line is the only one beyond the overbought or beyond the oversold at the point of the trigger. Okay, this is probably over one too many. Do you see what I mean? So this is really straightforward. You don't even need to see price. You can just look at this and say, okay, when we'll leave that alone. Right here, when it got into the overbought, the open of the next bar. All right, let me write that for you. I'll do my best with the mouse. The open. I'm not going to type the whole thing out. The open, that's supposed to be an in. The open of the next bar when it's overbought like that. All right. You're going to, when it's overbought like that, you're going to sell it. Sell. Sell the open. That looks kind of like my writing anyway, you know. You sell the open of the next bar when it's overbought like that, 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 and overbought like that, you're going to sell the open of the next bar, right? So if I were to just put arrows on there, right here, you would sell the open of the next bar, so it would be that bar right there you would sell. And continuing down, you would sell the open of the next bar on this one, so it would be that bar right there you would sell. And on this one, you would sell the open of the next bar here. So we'll go back and look at this in a minute. Okay, and on this one, you would sell the open of this bar. And remember, this is a 31 range. So on a 31 range, I have a 9-point stop on a 31 range. Okay, a 9-point stop. Now let me just shrink it up a little bit. And then we can look at it again. Here we go. So right here, you'd be selling right there. And on this one over here, you'd be selling right here. Okay, and all the other ones you'd be buying. You'd be buying the open of the bar after this. Right there. Oops. Be buying that bar. And be buying the open of that bar. Okay, buying the open of that bar. Right there, I think. I'm going to move it over one. Buying the open of that bar. Buying the open of that bar. And buying the open of that bar. Alright, now, so the bar does not have to pop out of the overbought. No, it doesn't. Down here in the bottom, it's just got to go into the overbought or into the oversold. It doesn't come out of it. You're buying and selling when it goes into it. You're doing the opposite of what it's doing. If it's going up into the overbought, you're selling. If it's going down into the oversold, you're buying. Okay, you're not waiting for it to you're not waiting for it to come out. The reason you're not waiting for it to come out is because if our goal is to make $100 a contract, we'll say, and we're on a 31 range, if you wait for it to come out, you've already wasted 1.5 times what your goal is on the day, waiting for the bar to trigger, right? Waiting for the trade to trigger. So like right now, if we go back and look at all these things that happened and blow it up, I don't know how it did right here. You know, this was all just, as you can see, I was just winging it. So right here, you would have sold the open of this bar, sold the open of this bar right here. Goal for the day right there. You would have bought the open of this bar right here. See where the arrow is? You would have bought the open of this bar. You have a 9-point stop on this, 9-point stop. So the entry point is here at 22.5. It dropped down 4 points. So you're still in this trade, goal for the day. Right here, you sold the open of this bar, goal for the day. Right here, you sold the open of that bar, goal for the day. Right here, you bought the open of that bar, stop out, probably. You move your stop to break even after 10 ticks in profit. No, I'm sorry, with the NQ. After 4 points or 16 ticks in profit. So the entry was here at 312.75 and it ran up to 316.75, so exactly 4 points. So maybe, maybe not. The thing about these is typically when you get an entry, and this is a good example of one, when you get an entry, the momentum is going to be going against the direction that you're trading when you get into the trade. All right, like right here it was going down. So the open of this bar was right here, and then it dropped all the way down here. It dropped down some, and then it went up, and then it ended up closing down. So you probably had a chance to get a better entry on that down here, and then you've been able to get your profit or your stop to break even on the move back up. So that's not a stop out. All right, so every one of those so far would have gotten you the goal for the day. This one right here, the open of this bar right here, goal for the day. This one right here, the open of this bar right here. Now that would have stopped you out. Well, I don't know, it's got to be 9 points, and I think there is 9 points between here and here. So the entry point would have been here at 308.75. If you got in at 308.75 and not higher than 308.75, it pulled all the way back up to 322. So yeah, you would have stopped out on that one. That would have been a stop out. And this one right here, if you got the entry right here, it ran up enough to get your stop to break even before it pulled back. This one right here, you would have been selling right there. That's, I don't know if it pulled back 9 points or not. 303 would have been 312, right? 313. It did pull back the full 9 points. I don't know if it went far enough into profit to get you stopped to break even. Probably not. So you probably would have stopped out on that one too. This one right here, you would have been buying the open of this bar, and that would have gone enough to get your stop to break even. I don't know if it stopped, if it went down enough to get a stop out either. I don't think it did. 84 down to 77. No, it didn't. So you would have had a profit on that one. And this last one right here would have been overlapped with that one right before it, but you would have been selling the open of this bar right here. and that would have gone a lot sideways. You would have had enough room to get your stop to break even on that. So in this span right here, there was one or two stop outs and some really good wins in there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades right there. You had a couple of break evens, a couple of stop outs, and so that leaves 7 other winning trades. If you're just trying to get your goal for the day, then it's really easy. And yes, this is different than before because I changed the look down here, and I changed the way that it goes into the overbought and the oversold. So it has a gradual approach to the overbought and oversold. Excuse me. Before, it used to be more of a blocked approach where it would just go straight up into the overbought, and then you'd be overbought for a couple of bars, but you'd be in the overbought a couple of bars sooner. So when those ones that were questionable about stop outs, they definitely would have been stop outs the way it was before. All right. So I kind of improved the approach a little bit in that sense. So you're going to have fewer trades. Like back here where we went through this today. You see the ones in this span right here. Let's go back to, right, in this span right here. Yeah, from here. We'll say right from here. The ones that have the red and the black at the same time are the ones that triggered both of them. And the ones that have just a red are the ones that just triggered with this, and the ones that have just the black are the ones that just triggered with the way that we were approaching it before. They both work great, but the way that I'm showing you right now, using this approach with the area and the gentler slope going into the overbought and into the oversold, it produces better results. It produces fewer trades and just as good, if not better, trades. You can see most of them overlap right here with the black and the red are on top of each other. But sometimes you have these black ones right here that would have stopped out. Both of those right there would have stopped out. And those are just black. This one right here, you would have been selling. That wouldn't have stopped you out. But it would have pulled back pretty deep. But you see, this one right here that would have stopped you out was just black. It didn't have the red on it. And the ones that have just the red, there's only one of them right there. Was a nice winning trade. I think there's only one. Yeah. So it filters out some of those ones that would have stopped you out in there. Okay. And it results in just as good, if not better, results in fewer trades. So, I always said those are you guys that do the TV trades and the TIQ do them both. You get the training every day with the TIQ. That's what you're paying for there. And in here, you just get the indicators. With the indicators here, I'm always going to try to make them as good, if not better, than what we have over there. Because you don't get the training in here that you get over there. So I want the indicators to give you more information, make it easier for you to make decisions without having to look at anything on your charts, really. Down here, if you can look at the oscillator is going to tell you what to do. And all you have to do is watch for the open. You don't have to put an order on ahead of time. You don't have to try to time it. You don't have to try to get everything there all set up, figure out what the top of the bar is, what the bottom of the bar is. You don't have to try to figure all that stuff out ahead of time. All you have to do is recognize that this is happening. When this is like right here, know that on an up close on the bar, it's probably going to stick you in the overbought, and that's going to be a trade. And when this is right here, on a down close of the bar, it's probably going to stick you in the oversold, and that's going to be a trade. And when you get in the oversold, you can look to buy the open of the next bar. You don't have to have an order waiting. As a matter of fact, you shouldn't have an order waiting. Wait until you see what the open is, because usually price is going to move better, and you'll be able to get a better entry. And by that I mean, if we had this, like, these are range bars, so they have to close at the top or at the bottom. So this bar is coming down, it's closing right here, right? It's going to close right there. So the next bar, hang on. Now the next bar could have some slippage, up or down, it could have some slippage. But let's just say the entry is right here, and you're thinking you're going to go long because it's a down close, so you're thinking you're going to go long. And and usually what's going to happen is it's going to have momentum on the way down here. This bar closed because it exceeded the bottom of this bar. So it's going to have momentum, and it's going to keep going down over here. So you might get the open a couple of ticks down over here. That's where your open is. Or even if your open was exactly right there, even if it was exactly right there, I'm trying to remove that. Even if it was exactly right there, because this pushed down and it went to the open right there, because you exceeded the range of that bar, usually it's gonna run 3 or 4 ticks, keep going in that direction. So you have time to recognize the open, see that it's gone down beyond the open, get your order on anywhere down here, get long anywhere down there. Now it's gonna be, this is the paradigm shift. This is the part that's gonna be hard for you guys to get used to, but this is the part that makes it all worthwhile. Where everybody else is selling right here and the market's going down, you're gonna buy. All right, you're right here. The oscillators are telling you it's okay to take the trade. The oscillators are saying it's okay to take the trade. You're going to buy when it's going down like that. You put your order in, you buy right there. You have the same risk management that we always use for a 31 tick range. Now we use a 36 tick stop, a 9-point stop. I still have a 48 tick target on it. But managing the trade after you get into it is a little bit different because you're entering at a different place. All right? So the management of the trade is just a little bit different. All that stuff that I talked about the leg links earlier, that all comes into play right here. Now, is everybody with me so far? I know I said a whole bunch of words here, and I just want to make sure that all you guys are understanding it, and I'm not going too fast. I am recording this, so you'll be able to watch it later. Again, you'll be able to watch it here. If you go to targetviewtrades.com, upcoming and past webinars will be right here at the top. You'll be able to watch it there. The target and stops, okay, what I use for the target and stops, hang on. I'll tell you what they are. Alright, I'll show it to you too. It's going to be right here. You can make a screenshot of this if you want to. If I go to trade rules right here, this right here, I'll make a screenshot of it. And I wish I could post it in here in the meeting, but I don't think I can. Here, let me make this for you. This is what I do. Okay. So let's get back over here now. And here it is right here. For the different range bars that I use, this is what I use. All right, the stops and the targets. That's what I use for the different range bars. All right. Now again, most of the time I'm going to exit with a trailing stop. Most of the time. Okay. On a 31 range, I use a 36 tick stop with a 48 tick target. It was a 9 by 12 point bracket. 9 by 12 point bracket on a 31 range. Okay, so get a good look at that right there. And I'll save it. Maybe I'll be able to attach it in the thing that goes out later. I don't know for sure if I can do that in the follow-up thing. Okay, you got that, Ken? Good. All right, let me just save this. Stops and targets, that's going to downloads. All right. So, what I wanted to point out again is a lot of these trades that I did in the morning, they're going to overlap, but not all of them. And the whole idea, when you're entering the trade, right, when it comes in here, it's going to flow a little. It's usually going to keep flowing in the direction that it was when the bar closed down. So you usually have a good opportunity to enter. You don't have to try to calculate where the bottom of the bar is anymore. You just know that the bar is going to close there. And when it does, you just have to look for where the open was. And when you get that open, you enter the market. Right? You just enter the market where that open was. And when you do that, you should have a better entry. If not the right entry, it's not the exact right entry, you should have a better entry on most trades. All right. And then you just expect, the minimum that you would expect is that it would get up to the prior bar high. All right. So that brings us to another point that I wanted to cover with you guys. When choosing, there's a couple of important things really. When choosing your goal for the day, right? Now, some people choose, and this is my opinion anyway of how you should make this decision. Some people choose based on what they need. Some people choose based on what they want. And some people choose based on what's available. I think that the only real choice you can make is to choose something that is available. Right? You can want it, and if it's not there, you're not going to get it. You can need it, and that's usually going to lead to bad decisions. But if it's available, then you should get it. So choose something that is available. Whatever market it is that you trade, choose something that you can get every day. That $100, on every one of the markets that I trade, that $100 is nothing. We can get that every day easy. We usually get it in the first couple of minutes. If you look at the spreadsheet, so far this month, these are the number of trades it's taken me to get the goal for the day. 2 1 1 1 1 1 2 3 1. That day we had a rough day on that day. If we were doing the divergence trades in here, we would have got it on one trade. But 1 7 1. Up here we weren't doing the divergence trades that I'm showing you right now. We were doing the regular the regular ribbon trades with the trend. But okay, that's so when you're looking at this, I'm showing you right here in this period right here. There was, I think I calculated, what was it? 248 ticks net after the stop outs. 248 ticks net. So even if you did it with a micro, you were still up $124. With one micro, you're still up $124 after the stop outs. And taking just 20 ticks profit on each trade. Each one of those wins gave 30 or 40 ticks profit, but just taking 20 ticks profit, the goal for the day on each one of those trades that gave the goal for the day, in this span right here, this 1 hour span this morning, trading what I just showed you, there was a net of 1,240 ticks available. I'm sorry, $1,240 with one contract. And if you had a micro, it'd be $124 with one micro. That's one micro NQ at 50 cents a tick. $124. So it's there. It's there, and it's there every day. Every day. If you guys go out to your charts right now, those of you guys who are already members or already on the trial, if you go out to your charts right now and you refresh your range trigger, put in that password. The password again is F06354T. That's what it is right now. I'm going to change that probably tonight, but right now it's F0635 uppercase F, and it is case sensitive. F06354T. All right. If you go out there, put on your range trigger, and inside the range trigger, once you've refreshed it, inside your range trigger, it's going to have this password field right here, TV Trades member password. If you guys are just trading IQ and you're not an actual TV Trades person, not an actual TV Trades client yet, and you're just using the TV Trades range trigger by being a passport guy with TIQ, you're not going to have access to this. Well, you have access to it until I change the password right now, but you're not going to have access to it after I change the password. You have to be a TV Trades guy to get this, all right? There's got to be some additional benefit. And that's one of the additional, that's just one of many additional benefits, actually. But so that's all you have to do is go in there right now, type in this password, and you will have access to this and this. If you type in the wrong password, then those will go away. See if I put that on there. Then they go away. Okay, put the right password in, and they will show up. So go do that. If you haven't taken the trial, you got to take the trial. The password is that right now. If you take the trial, when you get access to it, that's the password that you're going to have. When you get an email, it'll give you the current password. You guys got to make sure you got to make sure to white label support at targetviewtrades.com in your email. Make sure anything that I send does not go to spam. I don't send that many emails, maybe like 5 a week, maybe. And two of those, one's on Tuesday, one's on Wednesday about this meeting. Those are two emails that I send out, and the other one would be the password. So maybe like 3 a week, really, is what I send. And even the password one's not there all the time, so maybe just 2 a week, unless you ask me questions. Speaking of that, if you do have questions for me, you can text me at 617-943-3298. Text me at 617-943-3298. Okay? Where is the purple mark for the update? It's going to be right next to it, Wayne. You'll see it when you turn your charts on. It'll have a little purple thing. I don't think mine has it anymore because I did the update. This one was the one I was looking at, right? Yeah, this little purple thing comes right after the word trigger. You have that little purple circle there. Okay. And Schwab, Shahab. I always put a B in there. Put an extra B in. Shahab. I'll send you a layout. I, I'll send you a layout, okay? And you'll have the layout to work with. All right. So that was what I really wanted to show to you guys. I wanted to show you this because this is pretty cool stuff, and this is really it is literally the best stuff that I've ever done. And and just look at every one of these trades. Every one of these where it comes up here by itself, you're selling the open of the next bar. Bam. You're selling the open of the next bar. The open is all the way up here. That's why you want to wait until you get the open. You sell the open. Bam. Right here, you're buying the open of the next bar. Right there. Bam. You're buying the open of the next bar. Bam. Buying the open of the next bar. Bam. I know I had to pull back, but it still went bam. Used to say that. Emerald, right? Emerald used to say that. Bam. And there's another one. Bam. And another one. Bam. That's funny. It's funny. Today's Jake. Those of you guys who know me, you know about my kids. But will there be a separate Telegram channel for these signals, or will they be applied to the current channels? Well, I hadn't created anything yet, Luigi. I haven't created anything yet in that regard. As we go forward with this, I'll probably create something that automates these for you, so you'll be able to see, you'll be able to get this information. But the information is going to be, it triggers here, and then it's going to have to give me, it's going to have to happen after I get the open of this bar. So there'll be a little bit of a delay, but it'll trigger, and I won't be able to give you the open until a bar later. So there's a little bit of a delay in here between the signal and the and everything else. But will it be easier or confusing if you place the TV trades on the screen? Hang on. That shows the blue for the trend. Oh, you're talking about the background. If you just throw the colors on there, this is what you're talking about. Will it be easier? Wow, it's taking a long time to load up. Alright, so it's loaded up. Will it be easier? It won't be any harder. If you had some nice trades right there from the TV trades, that's what's going in the alerts right there. Those are what's going in the alerts. Right? Luigi, what you were asking about would be a whole bunch of trades getting triggered to go into the alerts. And I actually pay by the trigger, and by the alert, or the signal for those with the stuff that I have in the middle. But no, you can leave the colors on here if you want to, and only go with the blue. Only take trades with the blue if you only take long trades that are in the blue. Only take short trades that are in the red if you wanted to do that. If it gets up in the overbought, sell it. If it gets in the overbought, sell it. If it gets in the oversold, sell it. If it gets buy it. You can do that if you want to, but you're buying at the open of the next bar. You're not waiting for it to come out of the overbought or out of the oversold. You're buying at the open of the next bar once it gets there. Okay. Okay, that's a good question though, Wing. Let's see. So, you can have that on there if you want to. If you want to just go with everything that we normally do, you can do that. I'm just showing you this because this is just a really cool thing, and it's really simple. It's really easy to see, and it gives you some great entries and great trades, and it does it over and over and over and over again. You are going to have your periods where you're going to have stop outs, right? You're going to have periods where you're going to have stop outs. If you have, like today, I think, was it today or maybe it was yesterday, I had 2 stop outs in a row in the same market, and I said, okay, I just had 2 stop outs in a row in the same market. What that says is the current market conditions do not work for the trade, for the time frame that I'm working with in the market that I'm working with with the risk that I'm using. All right. So there are plenty of things you can change right there. You can change all of them. You can change none of them and just stop trading, or you can keep trading and work. Just work your way through it. That happened yesterday. I had 2 stop outs in a row, and I believe it was on the Russell yesterday. I think. What did I end up negative on yesterday? Russell and gold I was negative on yesterday. I believe it was on the Russell yesterday. I had 2 stop outs in a row. And I said, this just isn't good right now. I'm just going to stop trading on the Russell right now and go trade something else. And that's what I did, and I ended up really well yesterday. But you can put this background stuff on here if you want. You can put the TV trades on there and use anything else that you want. This is just more information to get you into more trades as much as you want to. And you can do it on larger time frames if you do it on 100 range. It's all the same stuff. You know, you're still looking for the same thing. It gets into the overbought, you're going to sell the open of the next bar. Gets into the again over here, gets into the overbought, you're going to sell the open of the next bar. Gets into the oversold, well, you don't really have too many of those. Gets into the oversold right here, you're going to buy the open of the next bar. These are 100 range bars right here. Right, 100 range bars. They're $50 a bar with a micro, or $500 a bar. Right, and you see, you can do it on whatever time frame you want. For the ES, yeah, it works with the ES. If we change this to an ES, yes, and remember we're on the H contract now, guys. We're on the H contract. How many of you guys use NinjaTrader? Anybody in here have NinjaTrader that you trade on? So doing this on a 7 range on the ES. Same stuff, 7 range on the ES. Right here, you're selling the open of the next bar. Selling the open of the next bar. So you're selling up here, the open of the next bar. That's what I was talking about, the gaps. You want to wait and see where the open is and sell that. Right? The open of the next bar. The open of the next bar. See this one? The open was all the way up here on this one. It was all the way up there. Okay, I want to show you something about Ninja. I created something the other day. You know how DT Pro, the thing that I trade on all the time, this guy right here, that was supposed to go, supposed to be decommissioned last Friday. They extended it some, which is okay. We don't know what they extended it to, but they extended it some for us, which is a good thing, I suppose. But I was, when I'm done with DT Pro, when they do actually cancel it, I'm going to go to Sierra. This is Sierra, and Sierra DOM is very much the same as the DT Pro DOM. You see the right click does all the same stuff, so I'm going to use the Sierra DOM to trade with. But for those of you guys that use Ninja DOMs, if this is what you're used to looking at, actually that's not what you're used to looking at with Ninja, but if you're trading with the Ninja DOMs, I created this Ninja DOM yesterday. Look at that. Now that looks a lot like this one, doesn't it? And this is Ninja. Ninja's normally bouncing all over the place and crazy. I created this on the Ninja. If you want this, these are the settings. I'm going to right click, go to properties, and when that opens up, these are the colors you have to set right here. Just go to colors, down here at the bottom, go to colors, and these are the colors that I have set. So when you watch the recording of this, you'll be able to see all those, or you can take a screenshot of it right now if you're interested. Okay. If you use Ninja and you want your DOM to look like that. That looks like a normal DOM. Okay, I don't use Ninja, but I could not stand the way that it was. It drove me nuts the way that it was with that yellow thing that was bouncing up and down all over the place and everything was all black, and I hated the way that it looked. It drove me nuts. But this I could do. This is kind of normal right here. And you can change this color right here, the red. You can change that. That is actually this color right here. These two things, the bid price and ask price. That's that color right in there. So you can change it to be whatever you want. In here if you want to change it to be, well, it already is silver, but I guess you could change it to be blue. Blue doesn't really show up that well though. Change it to be navy. Make them both navy. And hit apply. And eventually it's going to apply it. There it is. That shows up a little better. Yeah, you could do that. Okay, I just wanted to point that out to you because that's something that I did yesterday. If you guys use NinjaTrader and you want to do that. I mean, if you trade on NinjaTrader. See, like right here, you would have just bought the open of this bar. You would have bought the open of that bar right there. Right there. Bang. And if this goes into the overbought, you would sell the open of the next bar. Right? If this bar closed up, you would sell the open of the next bar. All right, you see how easy that is? See how simple that all is? If this bar closes up, it'll probably get into the overbought and you'll sell the open of the next bar. I'm hoping we're going to have a single trade here. Now we're wrapping up the markets right here, so at the end of the day, it's almost 4 o'clock in FOMC day, so things are going to get really active right here, I suspect, in the next 3 minutes. Now an up close on this, you would sell the open of the next bar. There it is. You'd sell the up. Nope, they both went up there, so you wouldn't actually sell that one. That worked out, but you wouldn't sell that one because it wasn't by itself. The black's got to be by itself up there. Okay, and again, you can change all these colors too if you want to. Right, if this bar closes down, you would buy the open of the next bar. We're in a huge downtrend here, though, so I wouldn't expect much out of that. But if it closes down, that's going to get into the oversold, and you would buy the open of the next bar. There, buy the open right there. All right. So you would have bought the open, and from 57.75, it ran up to 59, so it didn't really go that far. Again, we're in a huge downtrend right here, so buying the open of that bar right there probably wouldn't have been a wise idea. But I'd be looking for the next opportunity to sell, and we haven't had one yet. We haven't had one since back here. This was the last opportunity to sell, was the open of that bar right there. Right, this one right here, the open of that bar. Sell right there. Okay? And it already went enough to get your stop to break even. But that's it. Okay, over and over and over again this happens. Every day, day after day. Right? And this is the ES. Actually, I forgot this was the ES. I was thinking it was the NQ, so you would have had enough room to get your stop to break even on a bunch of these here. I thought it was the NQ. So right here, if you sold the open of that bar, you would have had some profit in that, some good profit in that before it went. Right here, if you bought the open of that bar, you would have been buying the open of that bar right there. That wouldn't have worked out for you. But that other one over here, if you bought the open of that bar, you definitely would have got your stop to break even on that. I forgot the stop goes to break even after 4 ticks on the ES. I forgot this was the ES. I thought it was the NQ. But you see the beauty of all this, right? It's just a simple process that happens over and over and over again. All right, guys, it's 3:59. I just want to go up and see what about the red on that last trigger. Oh, about here, this one right here that you were talking about. You want the black to be up there by itself, like that. Like this is okay. This is okay right here. This is okay here. This is okay here. This right here with a red led up into the overbought. You don't want that. You want the black to lead up into the overbought like this right here. You want that black to lead up into the overbought or to lead down into the oversold. Excuse me. Right? See up here it led into the overbought. You sell it. Up here led into the overbought. You sell it. Down here led into the oversold. You buy it. Right here, led into the oversold, you buy it. So you would have bought the open of this bar. Bought the open of that bar right there for that run up. And right here, you would have bought the open of that bar for that run up. Right in here, you would have sold. It looks like you would have sold the open of that bar. Now, you can't trade any of this right now because of the way the markets are, but that's what you would have done. Right here, you would have bought the open of this blue bar for the leg up. Okay. You see it? It should be pretty clear to everyone. Alright, and that is it. Now again, I'm going to wrap it up, guys, because it's 4 o'clock, and I got like a million things I got to do today. If you have not taken a trial with us, let me show you how to do that again. Go here to tvtrades.com, just tvtrades.com. Click on this orange thing, or any orange thing on the way down. Take the free trial, alright? Now, when you sign up for the free trial, you're going to be given that password that I described to you that you're going to need to have access to this. Without the password, you won't have access to that. Without the password, it won't matter if you check these off or not. All right, without the password, those will go away. All right, you can check them off, but you're not going to see them. They're invisible. All right, you put in the right password, and you get access to them. Okay. Right here would be a short. Sell the open of that bar right there. Bang. Goal for the day. Alright, so you guys see this? You see how easy it is? Pretty simple stuff, right? I'll send you the template showing the open and the close. I'll create one for you, okay? Shop, I'll create one for you, and I'll send it over. Does anybody else want me to send a template that's got basically this stuff on it? I can send it for you. If you haven't taken a trial and you haven't joined and you're thinking about it, you're on the fence, you really should do it. Because honestly, I keep creating things that are better and better and better and better. And prices aren't going to be like this too much longer. Okay, Luigi, you want one? Job. Let me just write down the make list. Alright. Alright, guys. Well, that is going to... you had Ninja Trader 8. So you saw that thing for Ninja Trader, right? Shop. You got to see that. Alright, I could probably stick that in an email, too. And Ken, you saw the thing about the targets and stops. I put that. I actually saved it, but it's on my clipboard right here. So you can take a screenshot of that right now if you want to. We just had another short right here. The open of that bar right there was a short. Each one of those bars is your goal for the day, just about. Each one is your goal for the day. You see how simple that is? All right. D, yes. Let me put you on the list. Okay. All right. I really am going to wrap it up, guys. I got a bunch of things I got to take care of before I go and take care of all the other things. So thank you all for coming today. If you have any questions, I gave you my phone number earlier. You can text me at that number. Don't call me because I never answer the phone. Last time I answered the phone today, I ended up on the phone for half an hour with somebody trying to sell me a timeshare. That's why I never answer my phone. All right. Thank you all for coming. And I will, well, I'll be here if you need me. Text me or email me. You can email support@targetviewtrades.com or text me at the number I gave you. All right. Thank you all for coming. And we'll see you all next time. Again, remember, this is going to be the last meeting we have for almost a month. Because next week is going to be Christmas, and the week after that is going to be New Year's. So unless I change the date of the meeting and do it on like a Thursday or something, then this is going to be the last meeting we have for a while. All right? If you have any questions, I gave you my number. I gave you my email. Thank you all for coming. Have a great holiday if I don't talk to you all, okay? Have a great Christmas. We'll see you all.